A Painless Salvation, a Claremond Market Comment from March 2021. John Law did not set out to create a bubble or a bust. He tried to build a monetary system based on credit that was simple, efficient, and was supposed to improve people's lives. The result was that he was overwhelmed by his own credit creation, and his best intentions were undone. Charlatan, swindler, thief, and gambler. These are the labels history has pinned onto the name of John Law, the controversial banker from the early 18th century. The mention of his name conjures up images of contagious speculation and an era where avarice became entertainment. At the core of Law's financial theory was credit, with collateral being in the form of land, precious metals, and shares. This credit collateral system was to be managed by a central bank, such as the newly formed Bank of England or the older Bank of Amsterdam. John Law's belief and approach to money had a noble purpose. A well-managed credit system should improve the people's lives. It would increase trade, simplify payments, reduce the national debt, and harmonise taxes. In 1705, John Law, who had been supporting himself through gambling, began to tout these ideas across Europe, from Scotland to England to Savoy, and eventually to France. There, in 1715, a debt-burdened nation, hampered by corrupt tax collection, was struggling to pay its interest. The Duke of Orleans, the then regent and nephew of the deceased Louis XIV, decided to bet on Law's novel plan in the hope of transforming the nation's hardship into a revival. Act 1, 1716. Law opened the private Banque Générale. The share capital was paid up in a mixture of gold and the par value of discounted government bonds, an effective debt for equity swap. Now the Banque Générale issued dated banknotes. Although these were backed only 25% by gold, they were redeemable at an agreed date for 100% of the value in gold. Banque Générale notes were readily accepted and popular. Act 2, August 1717. The Louisiana monopoly concession came into the ownership of the French government via a tax settlement. Banque Générale decided to purchase the concession through a further share sale. It then restructured and floated the concession as a separate company, the Company of the West. Buyers were sceptical, and Banque Générale remained the largest shareholder. Act 3, December 1718. Banque Générale is purchased by the state and renamed Banque Royale. And two key changes take place. First, the 25% gold backing disappears, and secondly, the notes are now redeemable at face value rather than the original issue value. The removal of these strictures opened the door to excess credit and devaluation, with John Law still heading up both the Banque Royale and the Company of the West. Act 4, May 1719. The Company of the West issues further shares to purchase two additional concessions, China and East India, effectively creating a trading monopoly. But there was one hitch. To buy one share in the enlarged company, you had to already own 4 shares in the old company. The price jumped 30%. Act 5, July 1719. The Company of the West buys the Royal Mint and issues shares, but you must own the earlier 2 issues to purchase this third offer. The price now increased by 550%. Investing now buzzes with speculation. Act 6, September 1719. The Company of the West offers to buy all the state debt, and also take over and restructure tax collection with a new focus on income tax. Company of the West offers a massive share issue. It is oversubscribed, as you do not need to own any of the older shares to participate. The Banque Royale also offers 10 times leverage to anyone wanting to purchase these shares. By December, prices rise 150% and the word millionaire is first coined. There is a frenzy in property prices and other assets. Final Act 1720. John Law, now one of the wealthiest men in Europe, is made the Controller General of Finance. However, to keep the momentum running, he creates a system of options that allows investors 10 times leverage on the original 10 times leverage issued by the bank. Unsurprisingly, the share price shoots up 50%. Over 3 years, since Act 2, the Company of the West shares had risen 30 times, and credit had increased 50 times. Soon, profits began to be taken, but there was not enough gold to meet redemptions. Restrictions on amounts allowed to be converted from paper to gold were put in place, and that was followed by capital controls. The share price halved, and then it halved again. By September 1720, the total loss was 87%. Given 1/3 of France had invested, the people were broke, but the government, who converted their debt to equity by selling it to their populace, was scot-free. Over the past decade, our central bankers have expanded credit by 10 times, and the markets have responded accordingly. The key gambling tells from Law's episode above are as follows. To keep the investment magic credible, credit needs to keep expanding at an exponential rate. Any changes to the rules of the game are a harbinger of a creaking system. Finance, as a tool to improve the human condition, remains critical, but when it becomes the driver of our economy, it is because we are trying to literally paper over unresolved issues in our society, be they health, income, or expectation. John Law's tribulations lay bare the truth that finance cannot provide us a painless salvation. We will be holding a Zoom roundtable to discuss the issues brought up in this market comment. At the bottom of the email which you received, you will see a link. If you click on that link, we'll make sure that you're invited to participate in this roundtable.